Hey guys, welcome back to the ThoughtfulLeigh podcast. Today we got a lot of things going on, but first I do want to go ahead and state that I am not a legally licensed financial professional. This is not a recommendation or investment advice. However, it is for informational and educational purposes, just to learn more because we're curious citizens of the world. All right, so now with that out of the way, to start off the podcast, again, I don't know if it's to procrastinate. I guess it is to procrastinate a bit. Sadly, I did discover I'm a procrastinator, but here's some cultural stuff to kind of get out of the way before we go into the meaty stuff for today. Today is Friday, November 14th, and yesterday was the Latin Grammys. Should not be a surprise that Bad Bunny won Album of the Year with Debí Tirar Más Fotos. Karol G also won for Song of the Year with Si Antes Te Hubiera Conocido. Moving on from music to the realm of sports, World Cup qualifying matches are continuing until Tuesday. I have a confession that I like the Portuguese and Spanish men's national teams, so if I can try to watch some of those games, that's what I'll be trying to do. And going back to music real quick though, I did create a playlist just where I kind of saved down some of my music sets that I like to listen to when I'm working, kind of doing that, what is it called? They call it deep work? Yeah, when I'm kind of doing deep work. It's kind of like the more melodic progressive house, but then also I guess you can kind of call it tech house nowadays. But right now it's just house music with different realms within house music, but eventually it may also be different genres as I like to explore and broaden my horizons. All right, with the procrastination out of the way, we'll get down to today's podcast. First up on today's agenda is that it was announced by the private equity firm Apollo that they have become the major shareholder of the football club Atlético de Madrid, which is from Spain. However, with the La Liga teams of Spain, they do not only customarily have a football team or soccer, as we say in the US, have the main football team. They also do have basketball teams. In the announcement for the press release of the deal, it does say here from Apollo. So they have Apollo Sports Capital as an arm, and that is the entity that is becoming the majority shareholder. Within the statement, it says here, the shareholder group intends to invest additional capital to support the club's long-term plans, including further investment in Atlético de Madrid's teams. So I'm not sure if that's just women's and men's football, or if that's also including basketball. Okay, so I went to Atlético de Madrid's website. It actually looks like here. So they only do have a men's first team and then a women's first team. So they do not actually have a basketball team, like I thought. Because some teams do, I believe Real does, and then maybe a few others. However, it looks as though Atlético just has the two football clubs for men's and women's. So moving on to the press release. In addition to not only investing in the teams, they're also going to invest in major infrastructure projects. This includes the development of the Ciudad del Deporte, a new sports and entertainment district adjacent to the stadium, designed to serve a world-class destination for sport, leisure, culture, and community activity. I think this will be kind of interesting to see. I've yet to go to Atlético de Madrid Stadium, but I do think Atlético, just knowing La Liga and how Atlético de Madrid, at least within Madrid, is shadowed by Real Madrid. But I do think the team is getting a bit more well known by people. For instance, in the La Liga documentary on Netflix, I do think that documentary highlighted the team in a good way. Real Madrid, they did have some instances on the documentary, particularly some of the struggles that some of the players have been having within recent years within Madrid, but I think Atletico, at least, they did have a good presence on the documentary. So I'm interested to see how this additional capital for the team and kind of putting more development into the stadium and around the area around the stadium will boost the team. I mean, additionally, I think ultimately what comes down to is how performance comes into play in terms of Champions League and within La Liga itself, in terms of winning the league. But this could be an interesting deal, just in terms of getting Atlético de Madrid at least well more known than with people outside of Spain or who just follow La Liga. Moving on from there, if you see a glare in my glasses, it's my iPad. CNBC and Wall Street Journal both reported this week on a legacy lawsuit that's been happening between Visa, Mastercard, and their merchants. Litigation has been going on, I guess, since 2005. However, was a proposed settlement settlement that came into play this week, it sounds like. And part of that settlement, it does get complicated, it looks like, or it would get complicated in that historically it seemed as though if merchants accepted Visa or Mastercard, they had to accept all the cards that were a part of the Visa or Mastercard network. However, now it looks like part of the settlement, which is proposed still, there'll be 3 categories broken up for each network. And so if a merchant accepted a Visa card, for instance, it could choose which category of card it wanted to choose. Reading both of these articles that CNBC and Wall Street Journal put out, it does seem as though it could get complicated. I think we all know how popular credit cards have gotten in the past couple of years, particularly rewards credit cards. However, I didn't really know how much money was being made by these companies. And I just looked at their earnings because recently American, United, and Delta all kind of announced their earnings. I did try to look at the hotel earnings. I'm still trying to figure out from there what their earnings, particularly from credit card, was. For the airlines, it did seem like a bit clear to kind of put into terms. American announced cash payments for co-branded credit cards was $4.7 billion in the first 9 months of 2025, which is a 9.1% increase from last year, or the first 9 months of 2024. For United, other operating revenue was $2.87 billion for the first 9 months of 2025, which was an increase of $280 million from the first 9 months of last year. This number includes both credit card payments and then also payments that they received from United Club Lounge purchases. So for United, you could just buy lounge access to United Lounge if you wanted to, and so that's the memberships that they were selling, and that's what they're including in this other operating revenue. And for Delta, it's a bit unclear, as they kind of stated their miscellaneous other revenue was revenue that was generated primarily from lounge access and saying related to some American Express card holders. So this Delta, of course, their credit cards are through American Express. This miscellaneous other revenue number was stated to be $956 million for the first 9 months, which was an increase of 6% from the first 9 months of last year. While this is a proposed settlement, I particularly just wanted to do this segment to kind of see, like, I think we all know the credit card companies, they make their money by you swiping your card. That's the reason why they're trying to entice you with these rewards per category. However, I never really took into action to think about like how much United or like Marriott or some of the other companies who are the ones hosting these like credit cards, like how much they're actually making from it. And it's actually a lot of money, because I would never expected $4.7 billion for American to just be in credit card payments. But yeah, comment below. I'm really curious, like, were you expecting these numbers, at least from like American and like United and Delta? I really want to understand the hotel numbers more, because those are the ones that I think you do see people using, because like look at Marriott, they have credit cards with both Chase and Amex or American Express. So I'm really curious to see to understand their numbers more about like how much they're making from credit card payments. All right, that's that segment. The next segment on today's podcast is Richemont, which is the parent company of Cartier, Van Cleef & Arpels, and a few other like jewelry companies and watch companies announced their earnings for the first 9 months this is their half year results. So the first 6 months of, they're calling fiscal year 2026. If you watched any of my previous podcasts, you know I love fine jewelry. And can we just look at this like stunning piece here? And then these as well, like look at this turtle. And fine jewelry is just really so stunning to look at. But anyways, moving on. As I said, like they are a watchmaker company as well. So here's Vacheron and Constantin. So I'm pronouncing that wrong. Sales for the first 6 months were up 10% compared to last year, considering constant foreign exchange. Here they noted that double-digit increase in the first half of 2026, primarily due to 10% increase at constant rates, led by the jewelry maisons and local demand. Local demand now, it does seem as though, I've talked about this in a few podcasts now, and then also a few other results, where it does seem as though local customers are just buying items within their local domain versus traveling and buying the item. LVMH pointed that out, and then we've also seen that even like within the Federal Reserve's Beige Book, and some of the districts saying that they were seeing local demand versus tourism demand. There was acceleration in Q2 with sales up 14% at constant rates. Higher sales across all business areas. The jewelry masons were up 17%, specialty watchmaking was up 3%, and other was up 6%. So jewelry is really where the momentum was at for them this first half of the year, it seems. And then all regions were up double digits with return to growth in China. So they also said there were some headwinds that they faced, particularly unfavorable foreign exchange. They're not the only ones stating this. LVMH stated that there's unfavorable foreign exchange. Hermes stated that there was unfavorable foreign exchange. Adidas, and then even like Coach, I believe, or Tapestry said that as well. Higher raw material costs. So for them, they do later on state that that's gold, obviously with the jewelry. However, I do think it's interesting because gold is, within the world of like finance, gold can be considered to be a safe asset. So people are maybe going to gold because they want to diversify the portfolio some and provide like a safer asset, for instance. So people going into gold for like financial portfolio management reasons, it maybe is impacting or driving up the cost for them to buy gold. And then the initial impact of the additional U.S. tariffs that were introduced by President Trump. And then here they're saying that they're continuing to invest for long-term growth, which includes higher capex spending or capital expenditures spending to put investments into the boutiques and manufacturing capacities for the jewelry masons. Double-digit growth across all regions. Again, here, Americas is up 18% compared to first half of 2025. Strong increase at all business areas. So here it's your jewelry, your watches, and then the other is like some fashion companies that they have because they do own Chloe and Alaya. Double-digit growth across all markets. And then Q2 sales alone were up 20%. For Europe, double-digit growth as well, as it was up 11%. And then they said double-digit growth at the jewelry masons. Watchmaking was positive, and so was the other. For Middle East and Africa, there was a strong increase at the jewelry masons that they wanted to point out specifically. And then Q2 was up 22%. Asia Pacific was up 5%, led by the jewelry masons as well. Japan was down 4% compared to half one of 2025. Now their Japan results also mirror LVMH and Hermes. Off the top of my hand, I can't remember. I do believe LVMH was also down last year, and I can't remember Hermes, but they all really said that Japan had a strong last year, particularly due to tourism demand. But then this year, it does seem as though both strength, the yen being stronger, and comparing last year's strong tourism demand in Japan has led to lower numbers, which is particularly interesting. So it will be interesting to see how Japan finishes up the year for not just them, but for now it seems like all the fashion companies. And then Q2 was up 10% after being down 15% in Q1. So it does seem as though Q1 is really where it seemed like the impact was seen. And it's interesting to see here, it particularly looks like the jewelry masons were where they did well in all the regions, and even positively for watchmaking and other in Europe. However, it does seem as Americas is the one where it was the strong increase in all business areas, at least with them pointing it out on this chart. Moving on, just look at this beauty here. Look at it. Okay, now moving on to jewelry. Sales were up by 9%, 14% when considering constant exchange rates. Double-digit growth in America and Middle East and Africa. Q2 sales up 17% at constant exchange rates. So one thing I did want to point out here, so gross margin they said was impacted by unfavorable foreign exchange. Gross margin, so margin in general is kind of considering like you have a sales price, you have your expenses considering that. Margin is kind of like a ratio or percentage you can say. Considering your expenses, how profitable you are on that item. This was a very layman's terms, the way of putting it. So they're saying here, gross margin was impacted by unfavorable foreign exchange rates, higher raw material costs, aka gold, and additional U.S. tariffs, which was partially offset by price increases. So it does look as though they rose their prices some to address these headwinds. But then they also are saying that they're doing effective cost management while investing for the future, which means sustained investment in distribution and manufacturing and disciplined communication spending, which was slightly above than last year. So here it's saying that their operating margins for the first half of 2026 fiscal year was 32.8%. This number is particularly interesting just because they are reporting their first half results now, but LVMH did report their first half results a couple of months ago, so it's not comparing apples to apples, but within their first half results of I can't remember if LVMH is calling this fiscal year 26 or 25 yet, but they said So they're calling it half one. So LVMH is calling this first half of 2025. Their operating margins, LVMH only provided their operating margins within the first half results. It did not provide it in the Q3 results that did just come out. Their operating margins for watches and jewelry as a segment was 15%. So Richemont does look as though they have better margins compared to LVMH, which is just interesting to see. So they are saying, though, however, it was a decline slightly, which is what they're saying, compared to last year's first half. Now, what drives their margins to be different, I don't know. It could be a lot of things in terms of like expenses that they have. LVMH, for highlights, they wanted to highlight success of timeless collections in both jewelry and watches. For Cartier, it was the Clash. This is a collection I love. The Panther, which is a timeless watch for me. Let me pull it up here. I think this watch in general has always been a timeless watch. And then I think it also got more fame when people realized that was the watch that Shiv was wearing in Succession. I'm not sure, at least within the US. But I think when the whole like quiet luxury trend was going on, at least I started noticing people that weren't kind of talking about fashion, talk about this watch because of Succession, at least online. That's what I think. Panther has always been like a quality watch, I think. However, my love with watches, at least for Cartier, has always been the Santos also. And then this year, I forget when they announced it, but the first half, not only did they come out with a smaller version of the Santos, because I actually did try on the Santos in person, and I felt like even the medium was just like, they didn't have the medium for me to try on, but the large was just like insane. But not only did they come out with a small, which I do think might make some females consider, do they want this Panther or do they want the Santos, the small? But they also came out with a green dial. Like it's, I think only a large right now. I'm not sure if it's also a medium, but a green dial watch is also a really nice watch. So that's the Cartier updates. Later on, they do also talk about it, but I'll just pull it up now since I'm on the website. They came out with a new Love collection. It's within the Love collection, but it's the Love Unlimited. It's a flexible bracelet. I do think for people who like the Love bracelet, but didn't like, and the bigger, specifically the bigger Love one, the original one where you have the two screws, if they didn't like having the screws and how rigid the watch, the band itself was, like now that it looks like it's just a push clasp, I do think that is going to attract customers for Cartier who wanted the Love, but also did not want the rigid watch, the rigid band. Now I think this might also make people choose between this one or the smaller one. Like now also I think for people, I did see like some videos where people thought like the small one was not as sturdy potentially, so maybe people might flock to this, as again it's not as rigid as the original Love. Moving on from there, for Van Cleef and Arpels, of course you have the Alhambra and the Pearly collections, but they also know, and the Flora, which the Flora's two finger rings will always be a ring that I love. But now they're also within the Flora, they're introducing the flower lace, which look how beautiful that is. I do think Van Cleef and Arpels, they do dainty jewelry so well. It just looks like really a beautiful collection. So I'm really interested to see how this does going further. But wow, look at these pieces though. So we kind of went over the new launches for Cartier with the Love Unlimited, and then also the flower lace collection with Van Cleef and Arpels. Hey guys, this is Leigh in editing mode. I just wanted to stop in and say I did want to add a quick note. For the Van Cleef and Arpels Alhambra, I still like get that name mispronounced. For that collection, it's really interesting to see all the men kind of like rocking the pieces. In terms of, I've seen a few guys with the bracelets for the onyx stone, and then one of my friends sent me one of the Dodgers players during the World Series. They were wearing the necklace and the agate or the blue stone, which is also interesting. I know like for Cartier, the Houston Clou was popular for some men to wear as like a trendy bracelet, but it's interesting to see Van Cleef also now becoming popular with the men as well. All right, see ya. For specialist watchmakers, they were saying sales were down 6% or negative 2% at constant exchange rates. Double-digit growth in the Americas, partly offset by lower sales in Asia Pacific and Japan. Q2 does look like it did help some as sales were up 3% constant exchange rates, led by sequential improvement across all regions. Gross margin, again, primarily impacted by unfavorable exchange rates, particularly, I guess, Japan, and then rising gold prices and the U.S. tariffs. So same thing as jewelry. So here, operating margin. It is interesting to see how like much lower operating margin is for watches and it is for jewelry. So jewelry was 32.8%. However, here it looks like for watches it was 3.2%. However, compared to last year, it was 9.7%. So their like costs definitely went up compared to last year. Here they're saying it's a mixed performance across all maisons, reflecting their regional exposure. And then here it's also noting that they celebrated 270 years for Vacheron and Constantine. That's a very long time. So congratulations to them. I think for Zenith, I forgot how many years that they were celebrating. I thought that was a really long time, but 270 is like just incredible. Wow. Just talk about like legacy in that sense. So for other, sales were down 1% or 2% at constant exchange rates. Growth of sales in Europe and encouraging signs in the Americas, which is two key markets for the business area. Again, we'll see in the slide below this, but it's Alaïa, Chloe, and some other brands. Slight increase in both retail and wholesale. Modest growth at fashion apparel maisons. Double-digit rise at the Watchfinder at constant rates. QTO sales were up 6% at constant rates. And then here they're saying operating margin for the other division was negative 3.2%, which was compared to negative 3.9% last year. So that's actually a slight improvement. So sustained success at Alaïa, continued solid performance at Peter Miller, improved momentum at Chloe. Montblanc is also owned by Richemont, so they're saying there's some progress being made there. Here they're going more into their gross profit, so they're saying gross margin as an entity was 65.3%, which is down 190 basis points, 1.9% compared at constant exchange rates compared to the first 190 basis points or 1.9% from last year. And so they were noting raw material costs were higher, which is particularly gold, which they are saying was mitigated by having existing inventory. So I am curious to see what this number will look like at the end of the year if they had to have bought more gold or like replenish the inventory levels, like how having to buy gold at a higher price may impact that. And then also initial effect from the increased U.S. tariffs. It does seem as though tariff rates for each country are still kind of being negotiated. So maybe we'll see what the new rates will look like and how that will impact margins for them. It does seem as though they already did a price increase. See, as I note here, like positive impact from pricing actions, aka increases, and favorable sales mix. So again, if they already did the price increase, I'm not sure what they're, in terms of like the next 6 months, what they're going to do. Adverse foreign exchange movements, mostly driven by the dollar, the Swiss franc. I'm not sure what this one is. CNY is the Chinese yen. That I should have known. Currency impacted their performance by 180 basis points, which is 1.8%. From Richemont's presentation, that's all I kind of want to go over. It does seem as though at this point, all the luxury earnings do kind of seem the same as though they're growing, but Japan seems to be a weak spot. Also, current exchange rates seems to have impact on earnings. Local demand versus tourism has been kind of the trend for them. And then what else? Again, it's just interesting to see how much higher their margins are, at least for jewelry, Richemont is than LVMH. It's just interesting to see such a big difference. Interesting to see the difference between jewelry for Richemont and watchmaking for Richemont, like the margin difference there as well. Because they're using gold, but I guess they're using a lot more gold and silver and other stuff for the watches than they are for the jewelry. At least that's my only thought. So moving on from Richemont, the last portion of today's segment. So last portion of today's podcast, we're talking about Prada, the first 9 months of 2025. And again, it's kind of just the same trend with these luxury companies that I did want to point out. For Prada especially though, it did seem interesting to see here that net revenue was up 9% at constant exchange rates. Prada closed the 9-month period down 2%. Meanwhile, Miu Miu is up 41%, which in quarter 3 alone was up 29%, which is like, I know Miu Miu, I've been seeing a lot of Miu Miu bags recently, particularly this model here that they have. That's a huge percentage to be up, and they're even knowing that was up against exceptional comps from last year. So here they're saying Miu Miu, the growth has kind of been based on high desirability, sharp identity, and captivating aesthetics. I think here though, as we know on Instagram, on social media, aesthetics really is the trend. So for their net revenue for the year, for the first 9 months, again they're saying here negative foreign exchange impact of 260 basis points or 2.6% on performance at current exchange rates. Yeah, so they're saying Miu Miu was up 29%, which which is against comps of being up 105% Q3 of last year. Those are insane numbers for Miu Miu. So while Miu Miu is up that much though, Prada still is very much most of the percentage of their sales by brand though. As you can see here, Prada 67%, Miu Miu is 32%, and then the other. By geography, it does look like all their geographies were up for the first 9 months of 2025 compared to the first 9 months of 2024. Here again for Europe, they noted positive performance in Europe over the 9 months, Q2 and Q3 exhibiting similar trends with local demand holding up well and tourism being softer. So again, people are buying locally versus traveling and buying. Good progress in the Americas. Growth in Japan. Again, so Japan grew despite there being like a high comparable towards last year and with tourism in 2024. So particularly they're saying that was in the first half of the year. For Q3, it was driven by both solid local and increased traveler demand. So I guess travel demand might be coming back in Q3. So for the full year results, be interesting to see if those travel numbers do turn around and what that looks like for everyone else in the full year results. I do think the spring is popular for Japan as well, so that might be interesting to see what those numbers look like. So solid growth in Middle East as well. And I think that's all I want to say for Prada. For Prada, again, really interesting to see the growth of Miu Miu, but then it also seems as though they're highlighting what everyone else is saying as well in terms of foreign exchange rates, Japan compared to last year, and then also just local demand versus travel demand. All right, guys, that was this week's podcast episode. I hope you enjoyed it. Leave comments down below. Are these results interesting to you or surprising to you in any way? Looking forward to seeing you next week or just through any of my other videos. Hope you have a good weekend. Bye.